Hello and good afternoon. I mean, it's now in the morning, but you will be seeing this in the afternoon. We're going to do a recording. I have a meeting to attend today, Friday. And yesterday we had a significant sell-off in the equity markets, given that we are very close to all-time highs. The government opened in the US, so I was under the impression, or many people was under the impression that, hey, we could trade higher. It was a day for the bears to show control, and they did. The next question now is, are they going to continue? So let's do the daily routine. You remember, we go to this website, which is in the description. We open all the charts here. And the last one is the link to get Discord and so on. Today, we have PPI, 8:30, retail, 8:30, and business inventory at 10. Then we have the natural gas at 10:30. Everything is New York Times, right? That's the economic calendar for today. What do we have here as of the close of yesterday? Remember, this is the close of yesterday. Drop for main indices. Actually, we have a drop from every single index. The S&P 500 had a negative, strong candle to the downside. Now we have 3 weeks negative in a row, and this is something that we can see in the video of yesterday, where we were positive just a little bit yesterday. So what we want to see, okay, no, we have 2 negative weeks, and then we have a positive one, like we did here, or we have 3 negative weeks in a row, and that's something that we didn't see, at least in the data I show here, since May for the S&P 500. It is true that today could reverse and close positive. It's only 1.5% from yesterday's close, but it is not looking so promising so far. The day yesterday was 1.5 down for the S&P 500. Relevant. It is relevant, right? Here we have what, June, May. So about 6 months. In the last 6 months, we only have 4 days less like this. The New York Stock Exchange, new highs to new lows. Look, this is something relevant because New York Stock Exchange was receiving money for the first few minutes of trading. Nasdaq was not. It was the volume was coming out of Nasdaq, of stocks trading in the Nasdaq, right? Now this chart shows Nasdaq lows, more lows than highs, and the S&P 500 still flat. This is not very strong. We can compare this to the data in September. The data in the beginning of October is very different. Look, from since the day of the Fed, that was around 27 to 30, see that stage, the Fed talk, right? The market has not shown strength. That's something we need to take into consideration. It can flip, right, very fast, but we have to take that into consideration. Nasdaq are not pressing higher. S&P 500 did press higher for 3 days in a row. You see here? The VIX, okay, we were saying yesterday the VIX was trading lower. Now we have to say we're back above 20, right? A VIX over 20, it's starting to get caution, right? A VIX below 20, fine. I mean, we understand the volatility needs to be present for price to move, right? A VIX around the 25 in this chart, then we have to watch, right? Remember, this is the front month. Gold, it reached or it closed above 60% year to date. Crude is still lower, near 15.6%. We mentioned that I want to see crude consolidate at 55, right? And the S&P 500 is still very good year. It's at 15%, almost 14.5%. We can see here, year to date, as of yesterday's close. This is the same picture. And here, let's see what we have different. Nasdaq 100 in the last 2 days. I have to review this chart because this is not correct. Maybe it's not updated yet with the data from Nasdaq. S&P 500 minus 1.6 in the last 2 days. Nasdaq 100. I have to review that chart. Gold is positive. Silver is positive quite a bit. Bitcoin in the last 2 days minus 3.3. Russell minus 3.1. Oil weak. So if we want to continue the weakest trend, these are the instruments that we need to look at. If we want to go looking at the bullish trend, these are the instruments we need to look at, right? Let's go to the major news of the day. And that's here. Not good news from Asia. China economic jolted by weakest factory output. And then that's on the main homepage. Let's go to the markets. It will say, yeah, stock crumble as hope fades for imminent Fed rate cut. And why do we want a Fed rate cut? I don't know, right? I don't know. We are all-time highs. I mean, the government is pushing for it. The people in the administration is pushing for it, right? British government bonds, stocks, and sterling slide. European shares fall as US rate cut expectation wane. So now we are seeing how, okay, in the main pictures, negative news. In the markets, negative news. Let's go into the US economy. Companies and US, right? US companies. So this is something from, a new one. No, okay, this is 3 hours ago. US stablecoin power play could epically backfire. Yeah, it could not, there's a rumor. Amazon, Microsoft effort to curb Nvidia export to China. This is Disney's news yesterday. Apple, okay. China iPhone sales jump 22% in the month after the 17 launch, right? Nvidia slides. That's what we have here. Let's go to the markets and let's focus on the trades. First, let's do euro. We go into the 50 minutes picture. We have a push to 1.16 last night. Yesterday. In the night, we had a higher low and now it retraced. Remember, US wants a weaker dollar. Euro does not want a strong euro. The dollar has depreciated greatly this year. I want a strong dollar, right? I want this to trade lower and consolidate 115. No trades here, nothing. Bitcoin, it broke 100, right? This is what we said, okay, the bulls need to show up, 99,000. It just traded. I mean, this was a beautiful short yesterday. I'm not trading this, but it was a beautiful short. I don't know why I'm not trading this. This was a computer. Computer, you put a trend line. If it doesn't break the trend line, right? You put a trend line. If it doesn't break the trend line, you keep short, right? I mean, breaking the trend line is closing, at least one candle closing above, like this one, right? Step loss, and that's it. Then crude 59. So look at the huge move overnight from crude that was trading at 58. It went almost to 60. That's a significant percentage. That's a 3.5%. And now that retracement about 50%. This doesn't look bearish at all. At all. Let me look in the weekly candles. Yeah, we have this trend line here, and we have the other trend line here until the triangle breaks. I don't have a proper risk reward, right? The yes. So this is what the trade we had, and we explained yesterday. We had a 2-to-1 risk reward ratio. So we say here short stops around this mark, right? This was the first box. We were trading inside of this box yesterday. We say if we want to do a 2-to-1, so this is the 1-to-1, one box, this box is the same size. Then this one, and then this box is the same size as the previous one. So the target of the short should be here. It didn't take it yesterday, but it took it overnight. Beautiful shorts, risk to reward 2-to-1. That trade is over. Beautiful short. I did not expect that it would do it in one day, almost in less than 24 hours. This is when you say how much money I want to put on the at risk, right? I didn't see it clearly as I see it now. Market internals were negative. You can see that on Discord. I posted the pictures and we'll review now. But the selling was, let me see the 50 minutes candle. It was constant. This is 50 minutes candles. So we review the selling of yesterday. Here is the open. Let's do the 5 minutes candles. This is 5 minutes. And you can see like in the 5 minutes, it's not so clear, right? So he opened, pressed lower, tried to go, actually took the shorts here. It took the people that had the opening prints as a stop. And then it went down until 10:30. So we can say here, okay, fine. 10:20, then consolidation here. We need to say this is consolidation. Broke this low at 12 lunchtime, right? To trade lower until 2. And from 2 to the close, it was again in the range bound. Now we're trading lower, but these charts doesn't show. No, you see now we're trading lower below yesterday's low. But what we see in the daily candle is a smooth down pressure. We move to gold. similar thesis, but in the long way. So here we have the risk we're willing to take, this risk, and this risk is from 929. So what? 700 is sorry. There's 120 points on the ES. So I mean, it's not on the gold. It's not low risk, right? So 120 points to make 2x, right? So this is the risk. It pairs this box with a lot of strength and is not reaching the target, right? But here said bull should get to work here, and they did. Now it's level 4 shorts, or let's say take profits here around that level. It's not there yet. Silver did it. Similar picture. The only thing with silver, it closed below this box. It did it, consolidated now, and let's see where it's going. So the NQ in the recording of yesterday, we have a similar picture, but it did not trade it. That's probably one of the issues I had. Now reflecting on it, I was focused. The weakness was in the NQ, so I was focusing on the NQ, but the risk reward did not match there. This is where we were trading yesterday, and I said, okay, so I risk this first box. It did the 1-to-1 yesterday, but remember, with 1-to-1, I'm not profitable trading, right? I have to go for 2-to-1. So, but the 2-to-1 is not there yet. We have to get at least to the low of the 7th of last Friday to match a 2-to-1 risk reward trade on this. And here I have the signs, stop loss here and take profit here. Let's review the internals, and then I'll give you my view for today. The internals yesterday were weak. The open, I have the picture here from yesterday on the Discord, so I can show you here. This is the picture from yesterday at the open. This was like 3 minutes after the open. So New York Stock Exchange negative, Nasdaq negative. The open low here. Here, this is what it got me. It started improving. Remember how the S&P got to the open imprint? So it started improving. The X opened, of course, very low, and then started improving. This is the opening prints on the S&P 500. In sectors, we were this is from 9:30 going forward. So in the first 3 minutes, we had financial positive. We have industrial positive. We have energy positive considerably, right? 0.3 for, and then Infotech was not negative at all the major stocks, the MAC 7 or MAC 8 or whatever. They gap down and they were not pressing strongly down. So I was thinking, okay, so, but then this is the picture at the close. So okay, the picture of the close is exactly the same. No, it actually was a bit worse. So this is the picture 9. So an hour before it closed. Do you see the consolidation here, the advance and decliners, and then it just took off? So we had to wait. I had to wait an hour or so, and it fell. The first hour of trading was not so clear, and I felt that to understand that, yeah, this is going to really fall. We had financial 1%, industrial minus 1%, Infotech 2.2 down on the day, right? From the opening to this point. The ticks were very much all below zero. We have a few closes above zero in the 15 minutes, but you know, they were pressing the minus 1000. Clearly, it was more bearish that my positions expressed. And this is the other picture, because if we go to the 3 time frames and we go to the YM, you see here the YM in the last 5 days is positive. The ES in the last 5 days is about flat. The Nasdaq is minus 1% in the last 5 days. Remember, this is the change in the last 5 days. So I was thinking, you know, this is last 5 days. So 1, 2, 3, 4, 5 here. Yeah, we pushed to all-time highs, then retrace. So is this really, really bearish when the Dow Jones made all-time highs 2 days ago? Right? Yeah. Yesterday, we retraced heavily after this high. Is it really, really bearish? That's why I say, do they really want to cut rates when these indices are near all-time highs? I mean, they have done it before. I'm not going to question that. So let's go in the Nasdaq and see what I can picture. Let's go to the ES. Nasdaq still have downside pressure to the target. Can it be done? Of course. I mean, this is only 200 points, right? So, but let's see on the ES, because we do have a different picture on the ES. Maybe we need to go to the daily candles. So I want to highlight this. We are inside of this triangle. It can move up and down significantly, like a couple percentages, right? Look, from this low oops, what's going on? Drain tools, give me this. This is a 3%, right? From here to here is a 3%. So we can move at 3% and still be in consolidation. And then when it breaks one of the sides, we have this huge box, right? That I don't think is going to determine much. I mean, I'll draw the box for you. This huge box, right? That is it is 6%. So we have a box or consolidation of about 6%. That is what? A little less than 1/2 of the yearly return on the S&P 500. to move up and down and still say, hey, we're bullish, hey, we're bearish. So it's not so easy to have a conviction here when the consolidation could happen inside of a 6% box. I mean, if we are trading here, it's like, yeah, I broke this trend line, so now we're going down, and then bounce right here or bounce right here. Or we could go trade over here to this week high next week and say, yes, we're going to the all-time highs. And then what? You want to take 1% risk with the possibility of 2% down or 3 or 4% down? Not so clear. So let's just don't destroy the capital you have accumulated this month. If you do the yesterday short, that's extraordinary. Congrats. That's probably the move of the week. And if we continue today with market internals low, and this is the target here, we could have another downside candle like this, like last Friday, right? But last Friday, you see how fast it reversed. So we are about to get into that area if we push much lower today. With that, I conclude. I mean, I don't have a lot more to say. Like I said, this is not live. It was a recording because I have things to do today. But I will post it at 2. And actually, maybe this is a better format than doing a live because I am not worrying about positions and other things that I might have to worry. With that said, thank you, and I'll see you in the next one. Bye bye.